Okay, let's discuss markets then. Deven Choksey joins in on the show right now. Deven, hi, afternoon. Post the capital tax adjustments, does life change for equity market investors? Do they need to now hunker down expectations for the remainder of the year or perhaps longer than that? Or do you think life will continue as is?
So good afternoon, Aisha. So on one side, I think we all talk about capital gain tax changes, short-term, long-term, both. On the other side, I think we say that thank God, I think they're not added, I think, wealth tax. I think so. I think the way in which we look at it, I think the tax has to be paid. I agree. But the multiple instance of paying taxes, starting from STT to LTCG to ST, short-term capital gain tax to dividend distribution tax to buyback tax, each and every tax, I think, which you are paying on different transactions as one single entity as an investor, is defeating the purpose of ease of doing business. That is a mute point. I'm not against, I think, the payment of tax. I'm not against the hike in the tax. The whole point here is that I think if you can simplify, like the finance secretary said, want to simplify it. I think if you wanted to simplify it, I think you should not have been, I think, collecting multiple taxes at different point of time. That's a mute point. Market, as far as it is concerned, I don't think that anybody bothers about, I think, this 2.5% hike in the long-term capital gain tax. Yes, I think in the short-term capital gain tax, I think when you are asking somebody to pay 20%, you definitely say that I think against which what eligible deductions I'm allowed. Am I allowed to, I think, deduct the cost of manpower that I employ against which I earn this income? Am I allowed to, I think, deduct the cost of, I think, the tools which I am employing for this kind of income that I'm earning? These are the legitimate questions that are being asked by the individuals. As a company, yes, you are, but as an individual, you are not. So 20% ratio and 20% rate of tax rather in STCG has to come along with, I think, some is allowed on the expenditure side. If that does not come, it defeats the purpose. That's what I think we are all saying about it. But anyway, no cribbing on this subject. I think as far as the market is concerned, we would like to say that I think this is going to be passed through in due course of time.
So, Deven, you think the moot point would be then to move on? And do you think the damage is already done with that knee-jerk reaction that we saw yesterday and the recovery thereof?
Yeah, indeed. I think the sentiments do get affected in this kind of a situation because when, as I was making a point, when security transaction tax was introduced, at that time the premises was that I think we don't want to collect tax, I think subsequently on subsequent gains. Thereafter, I think this STT continued and subsequent gains also started getting taxed. So I think one feels a little bit disappointed that I think one could have, the government could have looked at, I think, the promises which I think they made while collecting the STT, and thereafter, I think they're going to tinker around with it. At any point of time, I think if you tinker around with the tax rate, I think you also look at, I think, how exactly the resultant tax paying entity gets affected. I think that is the one part, not financially, but as such, I think on operational sides.
Fair enough. That's the view coming in on the taxation changes because, yes, if you add up all the taxes that an individual is paying, especially a salaried professional, it does add up to quite a bit. L&T is expected to report numbers later today. Yesterday, Deven, that stock was under pressure because wasn't really a big push on capex as far as the government budget is concerned yesterday. Overall, with respect to the numbers impending and the kind of prospects the company had, what will you do with L&T?
Second question or second doubt on the subject of this company getting the larger share of orders given the kind of thrust on infrastructure by the government, both on the domestic stuff as well as I think the overseas, particularly in the Gulf countries, Saudis, where they have larger amount of presence. They end up acquiring significantly large amount of contracts. That is definitely, I think, going in favor of the company. However, having said that part of it, I think these contracts, which are some large contracts over a period of time they run, I guess I think the challenge is in form of I think maintaining the kind of margins. This company has been facing acute pressure on I think creating I think or building the higher amount of margin portfolio from whatever execution that they're doing, and that's where I believe that I think that is a limitation of this business. That's where I believe that I think when the market gives premium valuation, at such point of time, market ignores the fact that there is an execution risk, there is an exit risk to the margin-related growth in the portfolio. When you ignore that, I think then the market languishes, and that's what exactly is happening with this company. Nothing wrong with fundamentally. maybe a justification is that I think if the premium valuation is commanded, the stock will probably move sideways and drag sideways for some time.
Right, okay, let's get in some BTST trades as well on that note then. Shrikant, what's on your list?
Yeah, this market is like becoming more and more stock specific. But at the same time, if we see the overall activity in the pharma sector, then in that we like Biocon. We also like Petronet LNG as well as LIC. So in that specifically, we like Petronet LNG, which is currently around 347, 348. Biocon, which is around some 345, 348. There also we are bullish and we are of the view that we can keep stop loss somewhere close to 329 for the target of 370, 375. For Petronet, we can keep stop loss around 344, 343. Just now, the stock has, I think, delivered its number. But based on its technical formation, I think this stock, Petronet, is also moving for the levels of 370, 75 in the near term. And here also, we can keep stop loss somewhere close to 334 levels.
Petronet, of course, there was that big beat that came on the earnings, and that's the reason the stock had perked up. But we understand that there could have been a one-off as well. In the meantime, Deven, we'll let you go. Thanks so much for making time and speaking with us. But coming back to earnings, Syngene is the one which is there at the bottom of your screen. A bit of a recovery it's showing from the lowest point of the trading session, because the commentary from the management has been quite positive. They say that they're on track to hit the guidance range for the year that they'd earlier articulated, and momentum is expected to build up in the second half of the year. So for now, they are expecting a bit of a recovery in the second half of the year. Kunal, what's your BTSC trade, and any word as far as Syngene is concerned on the charts?
Well, Syngene, I believe, looks attractive. In fact, that's a chart which I would believe at current levels of 750 approximately would be, looking out for a breakout on the upside. 820, 825 is where I would keep a target, so which means a potential 10% upside over the near term is what I'm expecting for Syngene. But the charts are looking also very strong on the medium to longer term time frame scale as well. Now, in terms of the BTST trades, two buy calls. The first one is upon Bata India. That stock has managed to make a very strong comeback, holding on to its 200-day moving average about the 1555, 1560 level. So would suggest a buy with a target of 1700. Stop loss could be kept at 1550. And second is upon India Mart. That's a stock which is breaking out of a major triangular pattern about the 3000 level. So buy with a target of 3400. Stop loss at 2900.
If you like this video, then like, share and subscribe to ET Now.